Well, let's take the conversation forward. We have Taimur Baig, Managing Director and Chief Economist at DBS Group Research with us. Taimur, great to have you in our studios this morning. What a pleasant surprise.
Good morning. Lovely to be here.
Wonderful. So much going on, so much to discuss, including, of course, what your interpretation is of the US president's statement that he made. Tell us that, but also tell us this, that India has done a lot in trying to fortify our economy here, in face of those 50% tariffs. So whether it's GST, whether it's a couple of other measures, do you think, numerically at least, these local measures are enough to offset 50%? Maybe 50% goes because of what we've heard. We don't know.
Right. I will compartmentalize the two issues. I think there was a secular need for some growth supportive measures anyway, independent of tariff, Trump, and everything. So when we look at sort of the loan deposit ratios evolution over the last 12 months, when we look at the capital market environment, extremely buoyant 23, 24, but from late 24 to now, it's not been that great. So to some extent, the three-pronged measures that we've seen, income tax cut, the RBI cuts, and now the GST rationalization, are great measures independent of what's happening on the external side. India can control what's happening on the external side. Trump may change his mind tomorrow, make things better or worse. The only thing we can do is work on the domestic demand side and the non-US aspects, doing deals with Europe, and Singapore's prime minister was in town, doing deals with Singapore and so on. So from that perspective, I think one has to sort of keep an eye on the prize type mentality that, we want domestic demand, we want manufacturing investment. We do what we can't control what the gentleman in White House is going to do.
But is it enough? Is it an offset? I mean, just purely when you do the math in terms of the economic impact, the GST cuts coupled with the kind of monetary easing we've had, is it enough to offset this, roughly 1 percentage point hit because of the tariffs?
Impossible to answer. Absolutely impossible to answer because we don't know the duration and the magnitude of tariffs. We have other uncertainty from semiconductor and pharmaceutical. So it is helpful. Is it enough? Only hindsight, and then Trump's tweets will tell.
By the way, Taimur is got you said a lot is going on, but I think he's got a freer kind of day today, Taimur.
Yeah, I was surprised by the fact that there's not much going on today. Yes.
Because money markets are shut.
That's right.
So yeah, I mean, you can talk to us.
Happy to be here.
Taimur, President Trump hailing Prime Minister Modi and Prime Minister Modi reciprocating, do you think this warmth between leaders will translate into policy?
I think that posturing and policy are interrelated these days, especially given the way Trump operates. If he wakes up in the morning and he's feeling good about himself, that will translate into some policy action, but it is transient. That's the problem. The U.S.'s biggest casualty, in my view, in the last 8 months has been the lack of reliability. Tomorrow, we might celebrate some exchange of warm words between the two leaders. That doesn't mean that it'll be like that a week from now. That uncertainty is paralyzing. When we think about the investment environment in the 12 to 24-month horizon with the U.S. demand in mind, it is exceptionally uncertain because nothing that happens tomorrow tells us what's going to happen day after tomorrow. This is, I think, is the biggest casualty, and this is going to hurt investments related to the U.S. It might solidify other investments outside the U.S. We use the acronym TOTUS, trade outside the U.S. 89% of global trade is outside. That, I think, becomes more reliable. With the U.S., that overhang is going to be debilitating.
Today you also have the virtual BRICS meeting.
That's right.
Right, which is, I don't think that's gotten too much attention, but what's your sense? I mean, it's going to be significant it's like everyone is hedging their bets to see what happens next.
Right, so it's odd, right? On one hand, the narrative from the U.S. is they only care about the U.S. They don't care about the rest of the world. On the other hand, they do care about every single other alliance that is being made because they see it as a threat to the U.S. So if the BRICS talk about some currency, tariff on them if they do that. If they're going to have a meeting, to your point, better keep it low-key because you don't want Mr. Trump to start tweeting about it. So the U.S. is sort of inside, outside. The one storyline that we completely miss out because we are so distracted by what's happening in South Asia, East Asia, and the U.S. is what's happening in Central America. U.S. Navy ships on the waters of Venezuela. There might be other countries where the U.S. might want to institute regime change. So on one hand, the U.S. only talks about fortifying its borders. On the other hand, it's really, really pushing its force outside all over the world, from the Middle East to Central America. This makes, again, life very difficult for government officials who have sort of built an edifice of trade and commerce around U.S. reliability. So that slipping and that inside out is causing a lot of uncertainty. Biggest manifestation of that is, of course, in gold prices, more so than rates, FX, equities. It's the gold price that shows how uncertain we are about the days ahead.
Well, Taimur, good to see you in the studio, and put it on a lighter note. It's like in high school. You don't want to go on a date with me, but you don't want me to go with the others as well, right? So just on the lighter note. But let's take a couple of those aspects forward. One is on gold. The kind of move that we've seen in gold has been phenomenal. It's done better than most of the stocks as well. And that's one data point that we're tracking from an equity market perspective as well. Point number one, so where do you see that headed? And the dollar index. When Trump, came to office, we saw it dancing way to around 110. Now, from an emerging market standpoint, it's extremely important. It's holding around that 97, 98. Do you see more weakness on the dollar index, or do you think from here on we see a bit of a rebound?
Nigel, with that jacket, I'm sure there were lots of dates, so that's not an issue. Yes. But, okay, so on the gold side, historic relationship between real interest rate and gold is very straightforward. When real interest rates are high, gold prices fall. When they're low, gold prices go up. With that relationship, which over a 20-year horizon is a very strong relationship, gold would be at $1,600, not at $3,600. That difference tells you how much geopolitical uncertainty is being embedded.
Right.
Whether it is a central bank balance sheet operation or individuals in China, in India, people are looking at gold increasingly as a source of hedge. So that, to me, keeps gold demand elevated regardless of the Fed does.
Okay.
Typically, Fed cutting rates is a bullish sign for gold. I think that is now breaking down.
Yeah,
I think
that correlation is broken a bit.
And it's really about the uncertainty. And I think as long as the gentleman we have in the White House stays, that uncertainty premium would be reflected very strongly on gold prices.
Before you answer the point on the dollar index, what are you expecting the Fed to do?
They'll cut, and they'll probably cut again. They probably would have cut without Trump, shouting at them, and they probably would have cut even without all these uncertainty with Governor Cook and so on, because I think the Fed's discussion tilt is going toward labor market as opposed to inflation.
Okay.
They will worry about inflation, I think, down the road if indeed tariff-induced inflation becomes big.
Yeah.
But for the time being, they'll just focus on the labor market. On the currency side,
Yeah.
big bifurcation. Against developed markets, the US dollar has weakened substantially. In emerging markets, it's been very heterogeneous. So you look at a country like India, weakness pressure against the US,
Yes.
but when you look at overall DXY, substantial weakness. I think that it sort of again tells you that the dollar is sort of pushing out its power in very asymmetrical manner. Countries that are subject to a huge amount of tariff-related issues, they will see their currencies weaken a bit. Currencies that can sort of stand up a bit to the US are holding up against the dollar. The biggest casualty in all this is the euro. I don't think the Europeans want a massively strong euro, but if you look at rupee's behavior against the euro, the way it has weakened, and the euro strengthened against the dollar, with all this tariff-related cross-current, question about competitiveness, issues related to China, everything gets even more complicated by the euro's sharp climb.
Very quickly, Taimur, one last question in terms of just figuring out flows. And this hurts a lot because the numbers are so stark in comparison. Nifty is flat for the year. I just checked the numbers again. Korea is up 25% last year. Mainland China, 40%. Hong Kong, 50% equity market. Do you see anything changing in those patterns? Or is this very durable growth that's coming back to maybe a China or South Korea? Because that's where the money's been going. So just want to figure out if there's any change in the near future.
I think that was more of a relative valuation play.
Exactly.
India had become expensive. The US is very expensive.
Yes.
I think I've come to the show in the past and talked about the fact that the relative valuation certainly meant that even US money managers felt deploying some risk to East Asia, in spite of all the tariff mayhem, was worth it, and it's paid off very, very handsomely. In the case of India, I don't think we should look at it as a 12-month horizon. Let's look at it as a 60-month horizon. The strength in India's capital markets has created very interesting secular tailwinds for deal-making going forward. When you think about Indian companies with 20-plus PE, they can find it very worthwhile to deploy that valuation to pick up companies in Korea, in Japan. So that outward investment, which we never really saw in the past, is going to help India because that brings in tech. Tech transfer. So I wouldn't sort of look at the ongoing weakness as a major source of worry. It's a bigger stock issue. The stock issue is quite positive.
All right, Taimur, have a wonderful day, a free day, and enjoy yourself in the city of Bombay.
With pleasure.
Thanks very much for joining.
Thank you very much,
Thank
guys.
you.
Thank you.